Gold and silver just crashed. Not because they suddenly lost value, but because millions of minds just got hacked at the same time. That's the part nobody wants to admit. This wasn't just a market move. This was psychology. This was power. This was fear wearing a suit and smiling on television. And if that sentence made your brain go, wait, what? Then you're exactly where you need to be. Because the truth is, money doesn't move first. People move first. Fear moves first. Greed moves first. And the charts, they just record the emotional damage afterward. If you like mind-blowing money and psychology stories like this, the kind that make you see the financial world differently forever, subscribe right now and hit the notification bell, because what we're about to uncover isn't just about gold or silver or the Fed. It's about the invisible system controlling how humans think about survival. And once you see it, you can't unsee it. So let's set the scene. Set. Gold and silver, the ancient symbols of safety, the metals that kingdoms were built on, the things people run to when everything else burns. And then suddenly, they drop hard, like someone pulled the floor out from under them. And the headlines scream, traders price in Fed pick. Markets adjust. Safe havens collapse. But here's the question nobody asks. How can something that's been valuable for 5,000 years lose value overnight because of one decision in one building in Washington? It doesn't make sense. Unless you understand that the market isn't a place, it's a mirror, it reflects the collective nervous system of humanity. And right now, that nervous system is twitching because the Fed didn't just make a decision. They sent a signal, a psychological weapon, a message to every investor, every trader, every normal person with a savings account. The message was simple. We are still in control, and control is the most expensive asset in the world. People think money is power, but money is just the scoreboard. The real power is influencing what people believe money will do next. That's what just happened. Gold and silver didn't crash because they became worthless. They crashed because belief shifted, and belief is the real currency. Let me tell you something uncomfortable. Most people don't invest based on logic. They invest based on emotion, and then they hire logic afterward as a lawyer. They buy because they feel safe. They sell because they feel pain. They chase because they feel left out. They panic because they feel alone. The market is not math. It is mass psychology with numbers attached. And the Fed understands that better than anyone, because the Fed doesn't just set rates. They set mood. They set fear levels. They set the temperature of human behavior. When the Fed speaks, it's not just an announcement, it's hypnosis. And the average person doesn't even realize they're under the spell. Here's the pattern. When people feel uncertain, they rush into gold. They whisper to themselves, at least this is real. When inflation rises, gold shines. When war breaks out, gold feels like armor. When banks wobble, gold looks like truth. But then, the Fed makes a move, a shock decision. And suddenly, people sell the very thing they thought was safety. Why? Because safety is not a metal. Safety is a feeling. And feelings can be manipulated. That's the terrifying part. The Fed doesn't need to touch your wallet. They just need to touch your nervous system. And once they do, your money moves. Look closely at what just happened. Gold and silver plummeted as traders priced in the next Fed pick. Translation? People started imagining a future where rates stay high, the dollar stays strong, and holding metals feels less exciting. So they dump them. Not because gold changed, but because the story changed. Markets trade stories, not reality. And the most powerful people on earth are the ones who control the story. This is where it gets dark, because the financial world is basically a giant emotional battlefield, and the average investor is walking through it blindfolded. Think about it. Every chart is a human emotion. Every candle is fear or greed. Every spike is hysteria. Every crash is surrender. And the Fed is like the person standing above the crowd, holding the microphone, deciding when everyone should feel hope or panic. So when gold crashes after a Fed shock, it's not random. It's the herd reacting. It's the crowd shifting direction. And here's the mini cliffhanger. This same psychological trap is about to hit crypto even harder, but most people won't see it coming, because crypto isn't just an asset. Crypto is a mirror of human desire. It's digital greed, digital rebellion, digital hope. And when hope gets manipulated, the fall is brutal. Let's go deeper. You have to understand what gold represents psychologically. Gold is not just money. Gold is control during chaos. It's the idea that no matter what happens, you own something real. That's why people love it. It's emotional insurance. Silver too. But silver is different. Silver is the underdog. Silver is the maybe this is my chance. Silver is the dreamer's metal. And both of them exist in this ancient category of human psychology. Scarcity. Humans are obsessed with scarce things. We hoard them. We worship them. We fight wars over them. Because deep in our brain, scarcity equals survival. So when gold drops, it triggers something primal. People don't just lose money, they lose the feeling of protection. And that's when panic spreads. But here's the manipulation. The Fed knows that. High rates make cash attractive. A strong dollar makes metals weaker. So the Fed doesn't have to attack gold directly. They just make the environment uncomfortable, they turn the room cold, and everyone runs out. That is behavioral economics in real time. Humans don't do what's rational. They do what reduces discomfort fastest. That's why most investors buy high and sell low, not because they're dumb, because they're human. And humans hate uncertainty more than they love opportunity. Let that sink in. People would rather accept a guaranteed small loss than sit inside the anxiety of not knowing. That's why crashes happen. It's not the asset, it's the emotion. Now, crypto. Crypto is the wildest psychological experiment in history because crypto isn't just finance, it's identity. People don't just buy Bitcoin, they join Bitcoin. They don't just hold Ethereum, they believe in Ethereum. Crypto is tribal, it's emotional, it's a movement, which means it's even easier to manipulate because when people tie money to identity, they become predictable. Fear hits harder. Greed hits harder. Hope becomes addiction. That's why crypto moves like a heartbeat on caffeine. Now imagine this. Gold crashes because the Fed shifts expectations. What happens when the Fed shifts expectations again? And crypto investors realize liquidity is drying up. It's a psychological bloodbath. And the people who survive are not the smartest. They're the calmest. Because emotional control is the real alpha. This is the bigger reveal. The market is a machine that transfers money from the emotional to the disciplined. That's all it is. A wealth transfer device. And it doesn't care about your dreams. It doesn't care about your rent. It doesn't care about your future. It only rewards one thing, emotional mastery. But the system is designed to keep you emotional. Breaking news alerts, red charts, influencers screaming, FOMO headlines. It's all engineered because a calm person is dangerous. A calm person doesn't panic sell. A calm person doesn't chase pumps. A calm person doesn't become exit liquidity. So the system needs you unstable. It needs you reactive. It needs your dopamine hijacked. That's why the Fed's decisions feel like thunder, because they're not just policy, they're psychological events. Now comes the twist. Most people think the Fed is reacting to the market, but often the market is reacting to the Fed, reacting to the market, reacting to the Fed. It's a loop, a hall of mirrors, an illusion machine. And inside that illusion, people lose themselves. Gold crashes, silver crashes, and suddenly the question becomes, what is real? Is gold real? Is fiat real? Is crypto real? Or is it all just belief? That's the dangerous realization. Money is not a thing. Money is a shared hallucination, a story we all agree on. And the people who control the story control the world. That's why gold matters. That's why crypto matters. Not because of price, because of what they represent. Gold represents ancient trust. Crypto represents future trust. Fiat represents institutional trust. And all of them are fighting for dominance in your mind. So when gold crashes after a Fed shock, it's not just traders adjusting, it's a psychological war over trust. Now let me hit you with something mind-blowing. The average person thinks they're investing, but most people are actually seeking emotional relief. They buy assets like therapy, they want to feel secure, they want to feel smart, they want to feel ahead, they want to feel like they're not being left behind. And that is exactly why they're vulnerable. Because markets prey on need, and need creates blindness. If you need crypto to moon, you will ignore risk. If you need gold to protect you, you will ignore reality. If you need the Fed to save the economy, you will ignore manipulation. This is the truth versus illusion. The truth is, wealth is built in boredom. Illusion is built in excitement. Most people chase excitement. Smart money chases boredom. That's why the crowd loses, because the crowd is addicted to feeling something. Fear, greed, hope, drama. The market gives them endless drama and charges them for it. So what do? How do you survive the Fed shocks, the gold crashes, the crypto storms without losing yourself? You zoom out, you stop treating markets like a casino and start treating them like psychology. You ask different questions, not what will gold do tomorrow, but what am I feeling right now? Not is Bitcoin going to pump, but am I being manipulated by a story? Not should I panic, but who benefits if I panic? Because someone always benefits. Every crash has a buyer. Every panic has a predator. Every emotional sell is someone else's opportunity. That's the real world stake. This is not a game. This is your life, your future, your freedom. And the most expensive mistake is emotional investing. Gold and silver crashing is not the end of the world. It's a reminder that safety is not an asset. Safety is emotional discipline. Because the real crash is when your mind collapses, when you lose control, when you become the herd, when you let headlines steer your nervous system. That is poverty, not lack of money, lack of control. So here's the resolution. Gold will rise again. Silver will move again. Crypto will shock the world again. The Fed will speak again. The cycle will repeat. And most people will react the same way. Fear, greed, FOMO, panic, regret. But you have a choice. You can watch the game, or you can understand the machine behind it. You can be the prey, or you can be the observer. Because once you see that markets are psychology, you stop being surprised. You stop being controlled. You start playing a deeper game, a calmer game, a game where patience is power. And discipline is wealth. Gold and silver crashed after the Fed shock decision because minds shifted, because belief shifted, because the story shifted. Never forget that. Prices are not truth. Prices are emotion. And the person who masters emotion masters money. So let me leave you with this. If the Fed can move gold with a sentence, imagine what the world can do to your mind every single day. Protect your attention. Protect your psychology. Because that is the real asset. That is the real safe haven. And the people who don't understand this will keep chasing and losing forever. One last thing. I want you to comment below, what emotion has cost you the most money in investing? Fear, greed, or FOMO? And send this to someone who needs to hear it before the next crash hits them. Subscribe and hit the bell if you want more cinematic psychology and money truths like this, because the next shock is always closer than people think.